Okay, hello everyone. If you're already here, we are going to start just in a couple of minutes. So please stay with us. So don't leave. Today we organized an event on a very important and very interesting topic about export finance and trade credit. So we have a very experienced expert this time, so who is going to share a lot of information and insights with you. So just 1-2 minutes, and we will fully start the webinar. So just stay with us, please. So if you have never joined our events before, so welcome to Manatex. We organize this kind of webinars from time to time and happily share our knowledge, experience, case studies, real situations, also our knowledge about different industries, different markets. So everything that we actually accumulated within years and years of our business, corporate and consulting experience. So we happily share it here. So we live with our mission to help small and medium-sized companies from all over the world to thrive globally. We do believe that small companies actually um, deserve to export and deserve to export better and get recognition on the international scene and not only just staying in their region, on their market. So we are doing everything so at this point so that you can improve your knowledge, you can improve your skills. So if you, again, never visited our webinars, our events before, my name is Nadia Mamet. I'm a co-founder of Manatex company, and we are not just another consulting company. We are a company that create a new tool, AI-powered platform that helps, again, small companies to utilize their knowledge, and also we share our knowledge through the platform. So the platform helps companies to export. It's going to be launched to the market very soon. So today our topic is very interesting and very, on the one hand, I would say so that to get this kind of knowledge, one has to work a lot internationally. On the other hand, it's something that probably almost every exporter faces sooner or later. And it's related to the many failures and many problems. So it's about export finance and trade credit. So today we organize our event in collaboration with a company from the Middle East, which is called Silk Road Heritage, and the CEO of the company, Ali Shahazi. Thank you so much. So he joined us today, and he will be speaking about the options that small companies have in this kind of trade credit options and what kind of options they have in this region. So he will be sharing this knowledge. So why did we decide to organize this webinar? So because we work a lot with companies from all over the world, mainly our clients are small and medium-sized companies, and we know firsthand how difficult it is sometimes to, of course, assess all the risks and manage finance. So just I give you just a couple of examples before Ali starts talking. So last week, my colleague and I, we had a very interesting discussion with the person who represents expert support organization in France, but from a different European country, so from Central Europe. And she clearly mentioned that in our country, so actually export potential is enormous. So, and exporters like smaller companies really want to penetrate new markets, including Middle East, by the way. So Middle East is one of the target markets for these companies. But very often they underestimate the risks. So they fail, so they start doing that negotiation, they invest in it, they travel, they do this, they do that. And at a certain point, they just cannot proceed any longer simply because they don't have enough money to pay for the product. Or so they just fail because local partners require some kind of post payment or credit line. So another example is just like a real case study, so which we experienced recently. So with a company producer of tea that was actually really like eager to export its product worldwide. And I'm just trying to explain it with the example so that you understand. Probably you already understand, but anyway. So the company, on the one hand, was, as I mentioned, very eager to proceed with the export. Also, the company had a really committed team who wanted to build this distribution to get to the shelves on famous customers worldwide. And so what happened? We matched them with a tea manufacturer in Europe, and tea manufacturer was absolutely satisfied with the quality of product, with the price, with the assortment, with the flexibility, with the logistics issues, certification. But so where's the problem happen? So the problem was that, of course, this kind of tea trader, our client, the company had to buy this bulk tea from in prepayment. So they had to invest their money before they even organize the shipment to Europe. So then shipment to Europe, of course, takes a lot of time. And then in the contract, it's written that, okay, we agree that our tea manufacturer pays us 90 days after the date of the product delivery. So why is that? Because the tea manufacturer, this European company, is distributing its product in retail. And in retail, if you have ever collaborated with a retail chains, you probably know that retail almost never pays prepayment to you. So it's always like 60 days, 90 days, 120 days. In the past, I was working as a retail buyer myself. So it was one of my most important KPIs to push my suppliers for credit line. So in case of my product, I had it like 120, 150 days. I had to push it, my suppliers. So this is actually the same. So a retail has to put this product on the shelf, end users have to pay for this. And after that, retail can pay to the manufacturer, and manufacturer can pay to the trader. So what happened at the end of the day? So this company, tea trader, started to experience a lot of cash flow gap problems. So they have to invest money, they have to organize the shipment, and many days later, they get payment from Europe. So how to avoid this kind of situations? So how to actually secure the company cash flow in this kind of situation? So there are special tools, and our guest today will tell us about the different options, different tools that exist. So what kind of tools can be utilized by small and medium-sized companies. So Ali, so that's your turn. So you can now introduce yourself, please, and yes, tell us, please, about, yes, so your topic. I'm also actually very interested myself because I also have limited experience in this area.
Perfect. Thank you so much, Nadia. Hello, everyone. It's an absolute pleasure to be with you today. So, giving you a very brief introduction. So, my name is Ali Shiraz, and I'm the managing director of Silk Road Heritage Financial Consulting Firm. We are a boutique financial consulting firm based in Dubai, and we help companies to have the right financial solution for their international growth, ranging from the structuring to the trade finance facilities and the solutions. So, and our major clients are the SMEs, which are the biggest segment of the companies globally. So, Nadia, thank you so much for arranging this webinar and having me here. It's a great pleasure. So, coming to this to this very interesting subject of trade credit, finance, and risk in Middle East. So Middle East, even these days more than any other time, is entangled with the risks, different types, financial risks, political risks, and other types of the risks that you see. So I think, Nadia, I cannot see you. Okay, you are back. I think yes. So then, so I've prepared a few slides for you, which is the most important one is that assessing the risk in export. So whenever you do the export, so you are exposed to, certain areas of risks, which could be the logistical risk, quality risk, financial risk, political risk. And because you are engaging with a buyer in somewhere else in the world, which has different dynamics in terms of the company or going to the macro dynamics of the country. So you need to be sure that first you have the great understanding, then you have the right solutions, and then you have also a good understanding on how to really manage these risks when you are going abroad. So when it comes to the financial risks, so payment risk is the biggest one. So anyone doing an export, so they want to receive their money on time as per planned, but this needs different solutions. So you need to have the right contracts, you need to have the suitable contract for your trade, and especially suitable contract for your market dynamics. Sometimes you are in sellers market, sometimes you are in buyers market, so you need to have something that can win the market as an SME going out. So you're not corporates that can always just dictate the requirements. So then you need to be flexible. So and you need to have it. So when it comes to the payment risk, so you are exposed to sometimes credit defaults of your buyers, payment defaults of your buyers, which necessitate to have sometimes credit insurance. So we will go and talk about it later as well. Then you are exposed to political risk. So political risk means that you think everything is in a good shape the day after. So everything in that country could be in a absolutely different shape, so that the banks cannot perform, or some import bans come in, some international transaction bans come in. So you need to be prepared for that. So most of these things can be covered with the right insurance policies to have. Then you have commercial risks as well. So then these commercial risks is very close to the payment risks, but you need to be sure about your payment terms, your delivery terms, as well as your product quality agreements, and how you want to audit the product quality as well. You have market access risk as well, which means that a very sudden, I can say, or a big move of a competitor in that market can change your position. So therefore, you need to have a good understanding of that. When it comes to documentation, so these are very normal things that you do: the bills, you do the logistical documents, certificate of origin. But the point is that, okay, to be sure that everything will be done in a shape that your buyer can pay against it. You have regulatory and compliance. So these days, again, these changes a lot. So coming these ESG requirements in EU or in other countries, so you might have more concerns around this, that whether your products can get in. If you are active in the healthcare and food sector, so then you're really exposed to this. You need to have a certain level of product quality to get in, and this would be under the demands of the regulators. And you have the country risk. So when it comes to the country risk, again, very close to the political risk, you have this issue that no matter how credible your buyer is, so you are under the risks of that country as well. So you need to be sure that you are engaging with the market, that you know how to manage it. Risk itself is an inherent part of the trades. You need to be sure that you know how to manage it. So, and you're winning over your risk management knowledge or your risk management tools. So for you, what I can, for SMEs especially, what I can tell is that growth is something that you need every day. Everyone imagine about growing or doubling or tripling the sales, but it's important to know that, okay, you are protected as well, because every growth comes with a risk of going down. So what I suggest is that insurance is a big part, or getting engaged with a trade financer could be a solution for you. So either you should do this, or either you should let your financiers who come in and buy the product from you and sell it to your destination market or to your buyer against a very reasonable fee, come in and help you in doing this. So what I always tell to my clients is that trade finance is not always a way to just increase your cash flow. It's also a way to have a protection, because you don't know that those markets. So these trade finances will help you. For example, exporting from Southeast Asia to South America wouldn't be easy, definitely. No one knows how to do a litigation, I don't know, in Argentina, or how to claim against a payment default. So, but when you have a good trade financer in between, so these guys say, hey, sell it to me and I will go there and sell it for you, actually. So you just do your marketing and have your peace of mind, and let us handle these risks. So this is important to look at it as well, that invoice discounting, LCs, and sometimes dealing with the trade finance is not about just having a better finance or growing the company. Sometimes it's about just protecting yourself and making sure that yourselves, your geographical expansion is not coming to you at the huge cost of like losing your current equity in the company. Nadia, if you have any questions or anything should be described
No,
in more.
so yeah, I am actually, yes, fascinated at this point. So what can be done, for example, if, this mistake is already made? So, yeah.
I say,
So this risk is underestimated. So, for example, yes, so the retailers for some reason doesn't pay.
Yes, so whenever you are exposed to a risk, and you don't really, you cannot reverse the deal, so you are exposed and you need to manage it. So what I always suggest is that you should first talk with the consultants. Because especially it's consultants with the local experience in that market to help you. And what you can do is that you can, review your terms and conditions, and to a spot where you are exposed. Sometimes risks have not occurred yet. That bad day has not come, but you can be prepared and you
Mm-hmm.
can think about it. For example, you have goods on sailing actually, so to the destination, and you want to be sure. So, for example, you can change your consignee and put some level of audit there and say, hey, you know what, we don't feel comfortable like before to just let you clear the goods from the custom and we just wait for the payment. So we change the consignee and we are waiting, and it will be just like doing an SGS report on the products, receiving the payment, and then releasing it. So some of the things sometimes, when you go to the intercontinental exports, so you have a long, shipment time, so you can play with it actually in that area. Or the thing is that sometimes in some cases, you can go and talk with the chambers of commerce in that country and to see that how you can really get the solutions. To at least understand whether your buyer is credible or not, or you are at risk. So you can be more prepared, or hire a good legal firm to be aside you, for example, to tell you, okay, sometimes when people understand that, okay, you are protected or you have the right team with yourself, so they get convinced to do it in a good manner rather than just jeopardizing that business relationship and going the wrong way. So then this can really protect you. But Nadia, the most important thing is that to have the right risk assessment. Risk assessment is something that will have a little cost, but it makes a lot of sense, and it's an investment.
Yeah.
So
Yeah, I know firsthand also the situations when people who actually were strictly against working with the consultants call me and ask me, "Do you have a lawyer in India?" So what
yes.
for? So like we we sent our product for $500,000 and we never seen the payment.
Yeah,
So
yeah, exactly.
simply, yeah.
It's important to know that these days, when you want to do the export as an SME, so knowing this trade risk management is like a muscle that each company should have, because it's like a P&L. Okay, so you invest in building the know-how of how to manage the risk of export, and then this investment will give you a result which you can export with less payment defaults. We have some figures as well about the payment defaults globally happening in the last like 4 or 5 years, which I will show it to you. but it's important. It's really important. SMEs are around. SMEs are around sales always. Okay, it's very important. I mean, people, everyone are sales oriented. Okay, unless I can say risk averse. Risk averse. I mean, it's like an DNA of corporates, but it should be a part of the SME as well. SME culture.
Yeah, for this you need, I suppose, as a person who is teaching in business schools in the universities. So I really doubt that, for example, if you apply for expert management program, so you're going to learn something like this. So because maybe it's part of, I don't know, finance program, but definitely not international business development, definitely not expert management. And I think it's a huge gap also in the knowledge of some students and graduates, and they just start negotiations and they are not prepared for this, so they don't even know so what kind of.
Exactly. But at the end of the day, a lot of these knowledge are localized. Okay, so you cannot sit in Amsterdam and learn how to do the management for a trade happening with India or Vietnam. Okay, so you need to go there and understand exactly about the dynamics of that market, limitations and challenges as well. But I just want to tell something for the participants. So I mean, see, for the political risk or for country risk, and also for payment risk, there are insurance products out there, okay, which they can get. So then I want to tell them that sometimes, these insurance companies come like as a support. So I mean, do this assessment for them and say you are going to a risky area, so you should stay away from it because it's too much for you unless you have something, I mean, very feasible or reliable to do this. But for documentation and commercial risk, so they should be in charge of it, and they should be sure that they are in the safe hands when they are going forward. Okay. So
Okay.
I have put one risk matrix here. So I mean, probability and the value and the sensitivity. So I mean, as you can see, the payment terms, I mean, is standing at the 2C, which is the most important one. And I want to talk about it more as well in the next slides. Actually, we are going to have. So I think people will have access to this fine. Okay. So, I mean, when it comes to assessing the risk, especially the financial risk, so I mean, credit reports are very important. So in Europe, I mean, credit information of companies are, I mean, available publicly, so you have a better infrastructure to really have access to this. But when it comes to especially Middle East, you have a very limited access, especially countries like UAE, so or Saudi, or I mean Turkey. So I mean, for example, UAE is just, I mean, recently doing the tax regulations, so I mean, promoting more financial, I can say, discipline around the companies. But still, you have the chance to acquire some information, and you can request some companies that are service providers, both locally and internationally, that you can reach out and ask for the credit reports. So it's important to know that if you're selling 500,000 euro of goods to a company, to be sure at least that the turnover is not 200K, so that you are selling just in two times of its turnover. So then you're at risk. Or to be sure that your partner is not, I mean, loss-making company, so that there is a lot of troubles there that might affect you as well as their supplier. So you need to look at it, and you need to be sure that you are shaking hands with the right company, and the company which is in the good shape. So in terms of the margin, in terms of the profitability, in the size. And then when you do this, you can have it from the credit scoring models, you can get the references, you can have the financial statements. There are clear ratios to just help you understanding this. And also you need to do the part for the legal I mean, I always say corporate governance health check. If you are signing a contract and you're happy, so you're secure, and the other day you understand, hey, I mean, the president should sign as well the contract, and it's not there, so you are not valid. I mean, so you, anything goes wrong, so I mean, no one will respect that contract. So these are the things that should be done in advance to be sure that everything is in a good shape. So you have some tools, so you can go for the banking instruments. There are some costs, absolutely, but it's more safe. You can do credit checks or credit assessments to do this. Different products are there. As you are doing AI in business development, so AI is coming to a lot of assistance when it comes to just handling this credit modeling, credit score modelings. You can do factoring as well. When I say factoring, is that when you export it, so you have some invoices, you're waiting for the payments to come. If you're on credit terms, some companies will come and get it, so buy it from you, and then they give you, I don't know, with a, I don't know, 5%, 10%, or whatever, in terms they, you agree with them, the funding. But again, it's important to get engaged with the right buyers, because at the end of the day, people will look at it whether you are selling to someone reliable, because everyone trusting. It's about the credit actually, and dealing with transparent companies. Sometimes transparency is way more important. Being a big company, you can be big, you can do millions, but not having a transparent structure. So going with a company that is transparent will help you to just build a business relationship with them over the long term, and having efficient payment terms. So I don't want to go to too much of details. So, but having the suitable payment terms for your trade, it's very important. And especially the payment terms should be checked with some local experts in the destination or in the target markets, to be sure, okay, so you are not going against the trends of that market for the trades. Yeah. So this is interesting, actually, figure. So default payment risk expectations, 2022 and 2023. So as you can see, so I mean, some of these defaults expectations are going up, going down, but it's there. I mean, anytime you hear about instability in an economy, so the very first part is the defaults happening. So it's important to be sure that if you are going out to different markets, so you are 100% protected against it, even against a lower margin. Lower margin could be handled. You can have good times, bad times, but going steady is more important than having like the high margin. So and you can cover all of these payment risks with credit insurance and trade finance, because these two go hand in hand. Any insured trade can be then definitely financed way easier. Yeah.
Yeah, but also with the economic situation, sometimes it's, unpredictable. So I do remember still time in the crisis of 2008, 2009. So when, corporations were not protected, not only small companies. So corporations actually had a lot of problems with the payment.
Absolutely right. I mean, so you cannot expect. I mean, things can happen, but I think that indicators are there as well. So if you think that you are engaging with a trustworthy company,
Hmm.
transparent company, okay, you know that even if bad days comes or challenging days come, so you are going to tackle this with the right partner. It's a very big difference to have the wrong partner in hard days than rather having a right partner in the hard days.
Yeah,
But
absolutely.
yeah. So it's very important. So I mean, I will not go through this slide because you mentioned it very clearly in your slides, Nadia, so that how much pre-export finance is important. But just to touch in different types of the export finance, so you can have the factoring or invoice discounting, which happens post shipment, and you have like pre-shipment finance as well. So the whole point is that if you are going for the pre-shipment finance, so banks and financiers should, I mean, trust you as the exporter rather than trusting the buyer, because the funding will come to just help you buy more products. So then, I mean, when it comes to this case, of more scrutiny will come on to you as the exporter. So then you would need to have a good, I can say, financial structure. So investing in your, I mean, internal financial regulations, investing in your corporate governance, showing that you have a very sophisticated decision making, that mistakes cannot easily happen by I mean just a loose decision making structure of a person, single person as the manager. So then these things can help you actually to buy in the trust. So you need to show all the financiers, banks, that you have a good structure. It comes with your financial statements that come on time with the right structure. Then you need to have a corporate structure, I mean corporate governance, to show you have a sophisticated decision making, and then you can expect people to trust your organization. That if you say you are buying 1 million to say for 1.5 million, it's really coming out of a real substance. Okay. If you are short of time, Nadia, tell me. So Okay, regarding export finance advantages. So, if you can get the export finance, if you can show that you are doing a reliable trade and export with the international trade with the partner, which means that um, financial health and also the reputation of the companies that you deal with, then you can mitigate your risks at the lower costs. So, which means that you will have higher margins. So, all are about premiums over the risks that the parties manage. It could be logistical risk, it could be financial risk, it could be political risk, and then means more margins for you. Then you can also improve your cash flow. So when you can cover your risks in a better way and in a more cost efficient way, then everyone would love to, I mean, invest somewhere or to, I mean, to give financial facilities to a company that it's covered. In anyhow, it's covered. If anything goes wrong, someone will come to cover it. So, and then you can enhance your competitiveness by being able to give more, for example, better payment terms. So you can offer credit to your buyers, and you can change the dynamics of your sales by having easier payment terms for your buyers. And then, I mean, any expansion for you in terms of the infrastructure for production or doing like packaging, port facilities, anything can come to you with a better cost. So then, I mean, if you're in a stable, a stable platform of the trade, I mean, coming from the supply going to the end, then you have a easier life, and you can do this, and it's possible really. It's not something that just you, I mean, eliminate a lot of trades. It's just about going with the right people and have the right study. Okay, and the trade credit advantages. So whenever you have the trade credit, you can easily set it up. So and it can really free up your working capital, because when it's covered by an insurance company, you have trade credit insurance, then you can really fuel your growth. So trade credit insurance, the first thing that it comes is that you sell, you don't collect. Someone will tell everyone that, okay, we will cover if everything goes right. Then the bank would be ready to finance you. Non-banking financiers, I mean, non-banking financiers are a big part of the market today, because they are taking the advantage of very slow processes from the bank side. So you can go there and you can get it. And also the digital trade finance trend here are enhancing the option for a lot of investors to come in and invest in the trade credits without the involvement of the banks as the gatekeepers. They will be just the operators for the transactions. So then if you can have this structure to have like a trade credit insurance, then you can do a lot of more options on your table for funding your company. Okay. So, and then when it comes to the export finance options, so you have instruments. So you can do LC, SPLC if it's a long-term agreement, bank guarantees again if it's a long-term agreement that you will supply frequently. Then you can have export credit insurance as well. So to have your trades insured, and then have your insured trades to be discounted with the banks or other partners if they're actually in the factoring companies, for example. You have the supply chain, so which you can, I mean, show to the financiers that how it comes. You buy from someone, you sell to someone else. So it really happens in the pharma sector that, for example, you have raw materials you buy, and then APIs, for example, then you transform it into a product, giving to the distributor. So it's a kind of a supply chain finance you can get. And then you can go for the revolving installments, consignments. So there are different options. Honestly speaking, these days, I mean, more and more options are coming out, and banks and financial institutions are trying to crafting new solutions for each sector or for each business dynamics that are out there. But these are some of the most important ones.
Okay, just one quick question. So, why small companies still struggle sometimes even to utilize these tools? So what kind of limitations exist for the company
Okay,
to enter this kind of scheme? Yeah.
it's a very good question. Generally, banks and financial institutions need to make sure that the company who is looking for finance has a substance in that business. The substance
Mhm.
comes out of generally two, 3 points. Number one, I don't know, 2, 3 years of history in that sector. Number two, showing like 3 to 5 years of stable financial statement, audited financial statements to tell them, okay, so what's
Mhm.
happening? with no loss there. I mean, again, numbers, the size of the numbers are not important. The health of the numbers are more important. And then you should have your team, your references. So if any of these items are missing, so then you have a challenge, because it's hard for the trade financiers or banks to really verify whether you have the substance in the business or you have the long-term presence in the business, at least a very serious presence. If it, I mean, again, for example, there are cases that they get financed with 1 year of history, okay, but the case should be very valid. But generally, when you do the export, the point is that, okay, even if the trade finance or bank doesn't trust you, they say, okay, you know what, I don't trust you. So please, you do your export. When your buyer, I mean, agreed that this is what I wanted, so then we will finance you. But even in these cases, which you are very fresh in the market, but you have the right trade and you have the right export, so then the scrutiny will go on your buyer, because the banks or your financiers are buying in the promises of your buyers. So it's important as well to get engaged with the reliable buyers. And again, when I say reliable, it means that they good audited financial books, good history, healthy numbers, and also, I mean, a good team. Team is important as well. If you have people, if you are investing to bring in people with the history in that sector, and this is a very big advantage. People will know that, okay, if someone with 20 years, I don't know, in FMCG is with you, so then no one wants to jeopardize his reputation just, I mean, for a little bit of higher number. So everyone will see. So, and then you can, your credit profile would be in a better shape. So, and the company should have credit profile. Credit profile is being shaped around all the information I just mentioned to you. So the
Okay.
issue is that companies don't have one of these items, or dealing with very risky, I mean, jurisdiction. I don't know, for example, Africa is considered as a risky jurisdiction these days
Mm-hmm.
because of the political issues always going on. Or Middle East as well. Middle East, has a lot of countries in the Middle East are considered a politically risky countries. You have very few countries in terms of the market size that they are considered as stable ones, which are like the GCC ones. But still, there are some financiers out there in the market that they are ready to just take the risk. To not as many as the country, I mean, banks that they are open to, I mean, finance friends, for example. But I mean, there are still players there. But you should have a solid case. I mean, so you should defend the case of the case. So we have this, and we think that this is stable, and we have the history, and we can do this.
Okay, thanks a lot for such a wide answer, so detailed answer, so a
Sorry,
perfect one.
something.
I wish my students do this, answer the question this way.
So give me my A plus, please, then. So, okay, I have put one case as well. So a case study, so which is not very different from what you mentioned. Again, most of the times it comes as the form of the shortage in the cash flow. So what happened is that, so you have a lot of cases, the companies that they want to buy raw materials and just transform it into a product with a higher added value and then sell it to another market. But if you don't have sufficient funding in order to just buy the raw materials, then you need to be sure that you have guaranteed sales. So if you can prove that your sales is guaranteed, it's covered, then you can come back and ask for people to just finance you for just purchasing the raw materials. So in order to save time, and I will share the file as well, I will not go through too much of details about this case, but companies which are struggling about the case, it's important for them to make sure that the sales that they do is somehow secured. So security could be in the shape of advance payments, bank instruments, dealing with big players, which they are very strong, and no one can really, I mean, easily challenge their credit position, and to do this. So in these cases, so you need to just build the case around the sales and showing that, okay, if you finance us, we have already guaranteed buyers that they are waiting for the products. So and we can do this. So for especially pharmaceutical companies, for example, or also food sector companies have a lot of these kind of contracts that they have, like revolving contracts that they want regular supply. So this could be a very, I can say, frequent case that they go short of cash flow for the production, but the buyer is ready, so they can use a lot. So I will go to the to the last part, which is the conclusion. So in these cases, so what you can do is that, so you can just make a portfolio of the account receivables and go after finance against this account receivables. Account receivables, in simple forms, it's just the promises of people that will pay you actually. So then, and you can ask people to just buy in those promises and discount it for you if it's coming from reliable companies. And then you can do this, or else you can just go for pre-shipment finance against your sales contracts. So be careful about your contracts. So if you have good contracts, good wording, good, I can say terms and conditions and mechanisms are there. So these really can change your portfolio of financiers, and you can bring in more financiers for your business.
Yeah, absolutely. This is paramount. So
Yeah,
to hire a great consultant like yours, good self, or just a good lawyer at least, so who can
exactly.
understand and read, and you can trust this lawyer on the market.
Trade finance, when you do the trade finance, so trade finance is a short-term engagement. So it could be, it's not a project finance that you sit on assets. Okay, so you say, okay, I have this, I have that. And for SMEs, the challenge with the SMEs is that you have the business, you have the margin, but you cannot convince people that you are stable and you're trustworthy. So this is the biggest challenge, there to manage. So then, for trade finance, when you want to build a credit profile, it's a 360-degree picture. So who is leading your sales operation? The profile of that person can affect the picture of your company in front of a financial institution as well. Okay, because when your picture is a company, is a professional company with a plan to be in the market for the, I don't know, next 20, 30 years, so then you can convince people to just trust you with the financial facility giving to you. Okay. So, I have put like 8 categories of the information, so that can be considered as, eligibility criteria for trade finance. So it's your balance sheets, positive cash flow. Okay, another point here. So when you're SME, you want to cut costs. Okay, and when you want to cut costs, you want to manage the taxes, and you prefer to show your profits a little bit lower, so and just manage it in this way to pay less in taxes, and this can jeopardize your credit profile. Okay, so you should really weigh the cost and opportunity when you are just managing your profits, or you're just, dispersing your profits in different parts of the your corporate structure. So because if you are, for example, deciding to just show the flat growth, so then it's really damage your picture as the company, that okay, this company hasn't been able to make any profit, so then why should we trust them? Okay, so, and to for the business. So sometimes paying a little bit higher taxes is something good, because it will unlock for you more opportunities to show your strength to make the profitability. Then you have credit worthiness, so good credit history. Don't go for defaults. Don't let anywhere to just have a negative, I can say, record for yourself. It doesn't worth at all. It will. You might survive. Sometimes hard periods of time, but when you look at it from the long-term perspective, you are really damaging what you can get out of the market. So what I suggest is always that actually, so try your best to keep your name as trustworthy as possible, because there is a very, maybe in past it was just a good name and a good brand actually, but today it means very clear access to the financial facilities. Then you have track record in international trade. Timely payments, compliance. Compliance is very important these days as well. So, AML risk and compliance risk is really, sparking, with all the financial institutions around the world. So be careful about the jurisdictions you deal with, and make sure that you have somehow, not that, for SMEs, it's not required to have like compliance officers, but make sure at least to have like just a review over the whole business to make sure you are on the safe side. Trade documentations, again, you need to show the trade financiers that okay, you have a proper licensing, documentation, invoices, purchase orders. So IT again is there to just tell you that having a good IT infrastructure, or maybe not yet these days, an AI system reviewing the docs can just bring in more credit worthiness to the company. That's okay, so you're knowing what you are doing, and you are doing it in a very efficient way. Risk management. So I think this is where you need to really pay attention if you want to grow your export portfolio. So you need to show your trade financiers or your banks, or that's okay, you know what you are doing and you have scenarios even for your risk management. And this is possible today to have this. Trade partners, credibility and financial stability of your customers and suppliers. So yes, you might buy at higher price from some of your suppliers, or you might sell at lower prices to some of your buyers because you are dealing with the big ones. But keep in mind that dealing with them brings you credibility. So you do it for something which is not immediate, but in the mid time, gains, it will definitely, bring you a lot of positive numbers on your financial statements. So it's good maybe sometimes to make a mixture of mid-sized companies as your buyers and also large companies, and always try to keep a portion with the large guys, even if you're going flat. Because if you're an SME, then it gives the credibility that you can really unlock more opportunities for financing your mid-sized kind of buyers in the market. Industry reputation. So your presence and the respect you get from your sector is there. And last part, compliance and regulations. So sanctions are changing every day. So in the world, so each country sanction another one. Actually, one product gets sanctioned, limitations comes in. Make sure that you don't get hits because of like just sloppy work around following up the regulations. Do this time to time, or coordinate with the trade chambers to just understand better about these ups and downs. Okay, so I think we have reviewed this, but the company with a good trade finance muscle will definitely win in the market, because interest rates goes up these days, and it's things that will stay up, and payment terms play a big role. Quality plays a role, but especially if you're a company doing like commodity products, so payment terms is where we can do this, and payment terms can be only get entertaining for your buyers or your suppliers if you have good financial solutions on your deck. So then I think it's worth looking into this subject with more energy and concentration, because you will earn over it. So sorry for taking it a little bit long, but I hope that it
No,
covers
no, no.
all
So I think
aspects.
it was like really perfect, and I learned a lot myself. So many things, and so I don't
Good.
lost for words to express how grateful I am
Sure.
that you joined us. So thank you so much for your time. So
You're
my
welcome.
question to the audience, if someone has a question, so can you please address it now here in the chat? So otherwise you can actually send us some questions later on. So we will respond it. So if you don't have it now, and maybe you get this question later. So okay, so do we have anything? So just I'm checking so the other platforms. Okay, no. Just in case, so this recording will be available on LinkedIn, so you can share it. You can, of course, give this link to your colleagues, and we continuously organize this kind of events and share knowledge again, so about industries and markets and tools and specialists, and also we give a lot of life hacks to small and medium-sized companies that can be utilized to improve their export journey. So thank you everyone for joining us today. This was a really interesting topic. So Ali, thank you so much again.
Thank you
So
so much,
for
Nadia. Thank you everyone for joining us in this session.
yeah, I think that it's how it all works. So if we have our experience, we should share it in
Yes,
certain way.
you're absolutely right. Yeah, we need to share
Yeah.
more. Yeah.
Yeah. Also, so it's export is still like this international business is still a playground of international corporations, but I do believe that at certain moment, so there will be a day when small companies will be successful too, so more successful.
Yes,
So,
yes. I think more and more when the world gets interconnected. So this, I mean, the small companies will have more access to the tools that big corporates have, and this will change the, I mean, the spectrum and the dynamics of the trade. Although, I mean,
mhm.
globalism is a little bit under attack these days, and everyone think that it's not the same issue like maybe a decade ago, but still export is very interesting, and SMEs are still the main player in the market for the export.
Yeah, absolutely. Okay, thanks a lot. So
You're
if you have any questions, so just follow our LinkedIn page. So us questions and attend our new events. See you next time.